Kenya's president on a 5-day state visit to China, its largest lender, while Beijing's trade war with Washington intensifies. How is it worsening, and what's the impact on countries like Kenya, which do business with both economic superpowers? This is Inside Story. Hello and welcome to the program. I'm Folly Thibault. Kenya's President William Ruto is in Beijing on a state visit, his third trip in 3 years, underlying the importance of China to his country. China is Kenya's biggest lender, funding major development projects, including road and rail infrastructure. But the trip comes as the trade war between China and the US worsens. Kenya and other developing countries find themselves in the middle. After imposing tariffs on most countries, US President Donald Trump is now seeking deals. Beijing is warning it will take action against any nation that makes agreements with the US that damage Chinese interests. Media reports also suggest Beijing is opening up another front, reducing investment in private US funds. So how is the trade war affecting countries like Kenya, which do business with both sides? Will they have to pick a side? And with China holding around $750 billion in US debt, what risks does that pose to both sides? We'll talk to our guests shortly, but first this report from Laura Khan.
The economy, trade and development are on the agenda for Kenyan President William Ruto's 5-day visit to China, as is the significant debt his country owes to its biggest lender, billions of dollars it's struggling to pay off. But now it seems Kenya may be entangled in a trade war between Beijing and Washington.
President Ruto was originally seen to be Western-leaning, to suddenly start leaning to the East to seek assistance. But I think in terms of how Kenya is attempting to navigate its debt issues, we've seen it trying to widen its scope of partnerships.
Almost a year ago, then President Joe Biden named Kenya a special US ally during President Ruto's visit to the White House. But this year, the Trump administration has cut more than $200 million in aid and added a 10% tariff on Kenyan goods entering the US. The East African nation is just one of many caught up in a tit-for-tat trade dispute between the world's two biggest economies. China increased duties on American goods to 125% after President Donald Trump raised levies on Chinese goods to 145%.
We advocate for inclusive and beneficial economic globalization, including a multilateral trading system with the World Trade Organization at its core. We must consistently uphold the principles of openness, inclusiveness and mutual benefit, oppose all forms of unilateralism and protectionism.
Last week, President Xi Jinping visited Malaysia, Vietnam and Cambodia to strengthen regional ties, signing dozens of cooperation agreements and sending a message that Beijing is a reliable trading partner. In the US, stock markets are volatile, with investors fearing the knock-on effects a trade war will have on the global economy. And on the streets, many are concerned that President Trump's trade policies mean familiar liquor and food from abroad will be served up with a higher price tag.
I mean, it's so soul-crushing and deeply saddening. Coming from the largest Chinatown in the United States, which is the Chinatown in San Francisco, to see what could possibly erase some people's ability to obtain things they grew up with, ingredients that they know and love.
China's GDP grew in the first quarter, beating expectations. But economists have warned of a sharp downturn in the coming months as the US tariffs come into effect. Laura Khan, Inside Story, Al Jazeera.
Let's now bring in our guests. Joining us from Beijing is Einar Tangen, a senior fellow at the Taihe Institute. Robert Scott is an independent international economist. He joins us from Rockville, Maryland in the United States. And in London, David Omojomolo, an emerging market economist at Capital Economics. He specializes in African countries. A warm welcome to each one of you. Thank you so much for your time today. Robert, let me start with you if I can. And these latest developments, Chinese investors reportedly changing their approach to U.S. private equity. Just how serious is this for the U.S. financial sector, especially private equity?
Well, I think private equity is feeling pressured not only by threats from Chinese investors, but by the tumult in markets caused by President Trump. His massive tariff increases that were imposed already, especially the 145% tariff on imports from China, have threatened to disrupt global trade and stimulate more inflation in the United States. And the stock market is down more than 20% since the first of the year. And so I think the bigger problems here are based in domestic investors at the moment. The markets are in free fall because of President Trump's actions, also his threats yesterday to the independence of the Federal Reserve, saying he wished to replace Chairman Powell.
Indeed. But do you think, Robert, that this additional pressure on private equity will pressure the Trump administration to rethink its stance towards this trade war?
Frankly, I doubt that. The biggest component of China's investment in the United States is public. China has over $3 trillion in foreign exchange reserves that are held by the central bank. In addition, the sovereign wealth funds hold nearly $2.5 trillion as well. So China is by far America's biggest lender, and most of that is public funds.
All right. Einar Tangen, from the Chinese perspective, what strategic purpose does cutting off private equity investment in the U.S. serve? Is it more about economic leverage or diplomatic signaling here?
Well, I think it's diplomatic signaling. Remember, if you start looking at this, at arm's length, Donald Trump's problem isn't China. It isn't the rest of the world. It's what he's doing to the American public. It's purely a bluff. Within 2 months, people will be calling for his head. He was elected by people who perhaps didn't care for his personality, but thought that he was the best candidate to control prices. And instead of doing that, he's raised them. So I used to run political elections in the U.S., and I can tell you for a certainty that people vote with their pocketbook, and they are not happy, and they're going to get less and less happy as these tariffs wind in.
David, let me come to you. I will, of course, ask you about President Ruto's visit to Beijing and the significance of that at this time. But I wanted to get your thoughts first about what Robert alluded to earlier and the growing concern that China might escalate the trade war even further by dumping U.S. debt. How realistic is that scenario in your view? And what would be the ripple effects of that, not just within the U.S., but for the rest of the world and the African continent especially?
Yeah, to talk about the realism of how likely it is, I think maybe a bit outside my expertise, but in terms of its potential implications for kind of African economies, in terms of the market dislocation it would cause, there was a worrying rise in, say, the interest rates that many African countries have to borrow on international capital markets in relation to the kind of trade turmoil that's happened. If we got an escalation, we'd worry that would kind of happen again, and that would leave many countries who need this kind of money from international markets to finance their kind of budgets in a really worrying place. I think that's the biggest worry, not the kind of direct trade implications of, say, US trade with Africa, but more this how global trade turmoil kind of impacts all of Africa's kind of trade partners and the global economy kind of in total.
Okay, so David, now let me ask you about President Ruto's visit to Beijing, which comes at a tense time, as we've seen in the US-China trade war. What opportunities, whether economic or diplomatic, do you see for African countries like Kenya? What can they extract from this deepening divide between these two economic superpowers?
It's a tricky one. On the US side, I think we've been making the point that the transactional style of politics that President Trump has kind of proceeded with, it's probably the buzzword we constantly hear, transactional, means that countries with leverage of sorts, whether it's mineral wealth or in Kenya's case, kind of strategic kind of importance from a security perspective, have the most to gain, I guess, or can really play off with the US what they can offer in that regard to perhaps get better kind of economic terms, whether it's on the trade perspective, whether it's FDI, investment, that type of thing. On the kind of China perspective, we think the relations with China are already quite deep anyway, in terms of the amount of trade. China is a much bigger trading partner for many kind of African countries than the US is. And you've seen over the last kind of few decades the importance of the loans that China has given to many kind of African countries and that financing. There's a question as to whether this pushes kind of countries to decide that China is a bit more of a reliable partner. They're less likely to kind of engage in the stick approach that we're seeing. But that's really dependent on what state China is in to carry on with kind of economic engagement. They're going to kind of suffer from this trade war. Does that have any implications for what they lend to Africa, the kind of investment they put in different countries?
Let's ask Einar about the China perspective. Einar, why is it beneficial to China to make investments in a country like Kenya, for example?
Well, quite frankly, I mean, the way that China sees the world is quite different. They're not out to conquer it. They're not taking over other lands. They haven't suggested that they should own Canada. What they do is they have these principles that countries should be secure, that there should be a path to prosperity, and that they have to be respected. And along that line, for the last 10 years, they put $1 trillion into the Belt and Road Initiative. It has not always been smooth. And there have been problems with loans, especially when they were government to government, because the only thing you know for certain is the next government that comes in is not going to be happy about what the last government did. But overall, Kenya has, for the last 10 years, been exceeding over 5% growth. It's actually outperformed the developed countries, while still having major issues with wealth disparity. But it's in the right direction. So China is not going to destabilize the world. It has no interest in selling off all of its bonds. That would create a global cataclysm, and that's exactly the opposite of what China has been trying to do. We saw this very clearly when Xi Jinping was first in Vietnam, then in Malaysia, and then finally in Cambodia. He was assuring people that China will be a reliable partner, that they'll continue to open up. So this is China's story, very different from Donald Trump's, as has been put out by my colleagues.
Your thoughts about this, Robert? Do you see this moment as a moment for Africa to pivot towards China, towards deeper integration with China, or is there a risk here on becoming too reliant, which some have said, you know, African countries like Kenya, like the DRC are already too reliant on China?
The African countries are at risk for becoming too dependent on China because China is investing so much in their development, infrastructure, roads, as the gentleman from China has mentioned, the huge Belt and Road Initiative has made these countries dependent on loans. And those loans at some point are going to have to be repaid, and that's going to exert a drag on the countries of Africa. So there's no free lunch here. There's nothing that you get for free, and there are costs involved.
What are your thoughts, Einar? I saw you shaking your heads there. Robert says African countries are already too reliant on China, on loans, and that there's no free lunch. What do you say to that?
Yeah, I mean, this is the debt trap diplomacy call saying, oh, China's somehow taking over these countries. Where is the United States? Where is the rest of the world in terms of helping these countries develop? I mean, the track record is clear. The last 10 years, Kenya's been growing. Why? Because it has had these loans. It's been able to use these loans to develop its infrastructure. If you didn't do that, Kenya would just be a subservient country at the mercy of the colonial interests that originally abused it. I find it odd that there is always this, oh, well, China's lending money. That's bad, right? Why would that be bad? These countries need to develop. And I would love to hear from my colleague about what it is that the U.S. or Europe has done to help African countries get out of it. And
all right, we'll ask Robert about that in just a moment. But let's hear from David on this. David, what do you make of what we just heard there from both Robert and Einar?
I don't want to be the middle ground and stand on the fence between kind of Robert and Einar. I think it's quite interesting. I take that point of what's the alternative. I think I talked about earlier the kind of worrying rise in kind of yields that many of these kind of African countries are wanting to borrow at. So they're quite boxed in terms of financing kind of budget deficits that many of them are running. So where do they turn to? And you're seeing the US, in a way, retreat from the kind of pivot that the kind of former administration was talking about in terms of relationship with Africa to a lot more transactional. So it leaves them to, okay, you can't borrow in international capital markets and kind of issue Eurobonds. The concessionary kind of lending from, say, the IMF and kind of other kind of organizations might be a bit more tricky too. So you've got to increasingly look to other players, and that's where China does kind of step in. I would say, in terms of that debt trap diplomacy point, I think it is a lot more nuanced, as kind of Robert mentioned. But there is this sense of debt restructuring talks when countries do kind of go over the precipice and default have become more difficult because of not just China, but it's simply because there are just so many kind of different organized stakeholders that African countries are owing debts to. Your private bondholders, the IMF and kind of other organizations are getting involved, bilateral lenders are getting involved. So that needs some kind of resolution. And I think from a China perspective, in terms of transparency around the debt terms, that needs to be addressed. Other stakeholders need to address the issues that they're kind of introducing into debt negotiations too. So it's a bit more nuanced, I think, is the final point I'd make.
All right, Robert, your thoughts. And as Einar mentioned, Robert, I mean, we've seen China engage African countries with high-stakes infrastructure deals like in Kenya, for example, in Ethiopia as well, and Zambia, the Lobito corridor with the DRC and so on. If the U.S. administration is right now signaling to some of these countries that they should not engage too closely to China, we've heard some of the threats from the Trump administration. What exactly is it offering in return? Are we seeing any comparable U.S.-backed initiatives that can match the scale at which China is engaging with the African continent right now?
I'm afraid it's just the opposite. President Trump shut down the USAID, which provided aid to African countries. It was not on the scale as offered by China, but it was still significant, especially for countries suffering from famines and other kinds of acute food shortages. So Trump has moved in the wrong direction in terms of his relationship with Africa and the developing countries, and this is not helping. So in a sense, we're pushing these countries into the arms of China, and this is not good for either the U.S. or Africa.
Right. So, Einar, where does China stand right now? We've seen it warn countries not to engage in deals that damage its interests at the behest of the U.S. We have right now, as we've seen, African countries like Kenya deepening ties with Beijing, while other countries like Ghana and Zambia, for example, are negotiating debt restructuring. Is China drawing a red line here? And how far is it willing to go if countries pursue U.S.-backed alternatives? I mean, whether it's in digital infrastructure or transportation, energy, or military cooperation, as is the case for Kenya, for example.
Well, it's a very different perspective. I mean, China has never said to anybody up to this point, you can't deal with the U.S., and they're not saying that. They don't care about anyone's cooperation. I mean, they deal with the Middle East states. They have very good relations, in most part, with the United States. They have military cooperation. It isn't an issue. It's about trade. But Donald Trump is saying to these countries that if you want, I'm going to slap you with tariffs. Now, if you don't want the tariffs, you have to do as I tell you. And what I tell you to do is stop trading with China. And China's saying, look, we're not going to countenance that. I mean, this is really troubling that you have this bully wandering around, slapping people around, taking their lunch money, and then saying you should thank me for it. As pointed out, Donald Trump isn't interested in the rest of the world. He's interested in only one thing, and that is, quote, what can those countries give America? I mean, this is the definition of, hegemony. Hegemony. I mean, he doesn't care.
Right. David, what can African countries give America today? They're walking a really tight rope here. Do you think they can realistically afford to alienate either China or the United States?
On the United States point, I mean, currently we've got 10% kind of universal tariffs, a 90-day pause on reciprocal tariffs. I think our kind of expectation is that the pause may be extended. So African countries aren't going to be hit yet, or it doesn't look like they're going to be hit by those kind of doomsday style tariffs that we're expecting. But I think we were making that point in that the direct implications of the trade hit from the US isn't as kind of doomsday as many would think. Certain countries, yes, but on the whole, the African countries are doing much more trade with China. It's a bigger trading partner. That's probably where the bigger concern should be. Not saying that they won't want to negotiate with the US, but this transactional style of politics, as I said, if you're not a mineral producer or you haven't got strategic security kind of importance, it's hard to see what the US are going to, or what President Trump is going to say can get out of kind of these talks with the African countries. On the China perspective, I'm not sure that China has to do much more to kind of convince African countries to align with it. We've got a global fracturing kind of proprietary measure, and a lot of African countries align with China based on that measure. And we kind of expect that to continue as well. So I don't think it's necessarily China going to have to do much when America's already probably alienating kind of countries that haven't got loads to offer in terms of leverage.
All right. Robert, before I come to Einar for his thoughts, what are your thoughts about where this is headed? I mean, are we seeing the beginning of a financial decoupling between the US and China? And is this a great time then for the global south, for African countries to move even closer to China?
I am concerned that that's the case. If we look at what China did during the first Trump term between 2016 and 2020, Trump raised tariffs initially on China to substantial levels, well below the current 100% plus tariffs, but in the range of 25 to 30%. China responded by shipping mass quantities of exports, diverting them from the U.S. to countries like Vietnam and Cambodia and Malaysia, exactly where President Xi is today. And in turn, those countries rerouted the exports from China to the United States. So although U.S. exports from China to the Chinese exports directly to the United States fell dramatically after Trump imposed tariffs, China's exports to the world increased overall. So China was not hurt particularly by the tariffs. They simply diverted trade to these other countries, and I expect them to do that again, and perhaps to expand that diversion through Africa as well.
All right. Your thoughts, Einar, about where this is headed. Is it, again, the beginning of a financial decoupling between the U.S. and China, not just in trade, but in capital flows and investment philosophies?
Okay. Well, this story, stop me before I spend again. American consumers spend $1 out of every $4 on imported goods. Whether they come from China, Vietnam, or wherever, it still is not coming from the United States. So, and they're not going to. They cannot be produced at the kind of prices in the United States. So let's put that aside. Let's talk about this 10%. Since it's going against everybody, all right, it doesn't make any difference. Basically, American consumers are going to foot the bill, or at least the majority of it. So, this idea that this is going to sink the world, no, it will depress demand on the American side, and that has an effect that ripples onto the world stage, because U.S., although it's only 4.5% of the world's population, manages to consume about 19% of the world's GDP on a yearly basis. So at this point, we're talking about a bluff by Donald Trump. He cannot decouple. Is the long term looking like there's going to be less cooperation between these two? I would say yes. The bookends have been reset, and they're a lot more conservative. America is justifiably concerned about its economic condition, but the way to do that is to outcompete nations, not try to bludgeon them to death with tariffs.
All right. David, I'll give you the final word. Where do you think this is headed? And also, David, are there lessons that African countries can take from this geopolitical tension in shaping their own sovereign wealth fund strategies?
On the first point, I think the worry I have is if you do get this kind of pivoting by China in terms of they've got huge manufacturing capacity, and they decide to, instead of exporting to the US, even if rerouting does work, if it doesn't work, you may see there's been worries about potential dumping and kind of manufactured goods going to kind of other countries. If that happens on the kind of African kind of side, you've already seen trade deficits in Africa between Africa and China kind of increasing. I think the worry is what happens if that kind of stops the kind of fledgling kind of manufacturing-led kind of growth models that perhaps we kind of hope for in terms of Africa moving up the value chain. So that's kind of one worry I have on just how Africa decides to engage geopolitically. I think it's going to continue to try to position itself in the most optimal way, kind of ensuring that it's able to get what it can from the US and what it can from kind of China. So not necessarily, it may be more aligned towards China, but not necessarily at the expense of completely kind of severing kind of ties with the kind of US. As I think one of the guests mentioned in terms of, say, kind of Middle Eastern countries having strong relations with the US despite also having deep kind of economic relationships with China.
All right. Thank you, gentlemen, to all three of you for a great conversation. Robert Scott, Einar Tangen, and David Omojomolo, thank you very much for being on this edition of Inside Story. And thank you, too, for watching. You can always watch this program again anytime by visiting our website at aljazeera.com. For further discussion, you can go to our Facebook page. That's facebook.com/AJ Inside Story. And, of course, you can join the conversation on X. Our handle is at AJ Inside Story. From me, Folly, Thibault, and the whole team here in Doha, thanks for watching. Bye for now.
Make sure to subscribe to our channel to get the latest news from Al Jazeera.